Now, oil is spiking more than 3% after Iran fired missiles at Israel. For more on where the futures market sees oil heading next, joining us now is Phil Streible, the chief market strategist over at Blue Line Futures. And Phil, let's take us through the price action that you saw today in oil again, and what the futures curve looks like, and what you think is next for those oil prices.
Yeah, looking at oil, I mean, it was the deteriorating geopolitical situation in the Middle East that really sparked those fears of the possibility of a major expansion in the hostilities that could disrupt some of these oil supplies. So what traders did was they scanned through the assets that could appreciate from this type of volatile situation. We saw gold futures pushing back up to 2,700, a spike in the volatility index. Many people were picking up S&P 500 put options as well. So the opportunity really, though, is in that crude oil market, because you look at the Middle East effect, a shutdown of the Strait of Hormuz and a broadening escalation that takes off about 20 million barrels of crude oil per day in petroleum products. Also, look at how managed money is positioned. Just a week or two ago, we were net short on these positions here. Now we are starting to see those people unwind the managed money. So crude oil prices are pushing back up. The volatile range we saw today was a test of the 50-day moving average, and we see an opportunity here to position for longer-term tailwinds, especially with stimulus from China and also the U.S. about to cut interest rates aggressively several more times.
So let's put the trade on for us. What exactly are you trading, and how are you doing it?
So what we're looking at is the December micro crude. We like the micro because of the scalability. It's $100 per every $1 move. We're looking at buying on a small dip back down to $68. The stop would be at 64, and we would target on a broadening escalation those July highs up at $80. So you're risking $400 to potentially reward $1,200.
And what exactly about that, besides the fundamental aspects you laid out there? Because if you look at the price and you look at the chart for crude, it's been not exactly a positive momentum story. And some would argue that the path of least resistance is to the downside, given the price action today. I mean, crude is already off its best levels of the session.
So it's the tailwinds. It's the China-related recovery. China's the #2 consumer of crude oil. They've already done whatever it takes here to get their 2024 GDP growth target back in line. They've affected monetary policy, the property sector, and also the capital markets. We do have the U.S. with our interest rate cuts could provide that stimulus, could get this economy back humming again. You also do have an OPEC meeting tomorrow. The current OPEC production is 26.6 million barrels. They're looking at more clarity on the supply situation. If you look at the month of September, they've had a net decrease of 480,000 barrels per day. And without Libya, they've still been curbing some of that production down 120,000. So it appears that many of these different OPEC countries are looking to push crude oil prices back up, and they'll do whatever it takes.
And one quick question to end on right now. Oil always kind of leads us to energy stocks as a matter of course. Are there certain parts of the energy complex that you think are better positioned than others?
You know, we still like all your producers, your refiners, and everyone else, especially in the transport section. So there's several different names that are out there that, you know, could gain exposure to. Things like ExxonMobil, one of them that stands out, and Marathon Petroleum are two that we really like.
All right. Phil Streible at Blue Line Futures with the trade on oil. Given everything that's going on today, thank you very much. We'll see you again soon. Kelly.
And that's